Hello everyone. Friday's session started off with a bang but kind of ended with a whimper, but the bottom line is, hey, we still finished higher. Volume was lower than the session before, so even though it does look like churning, the bulls will say that it's churning, that we needed a rest, that it's okay as long as the volume remains below average. The bears will say that this churning is topping action. We are still under an across-the-board buy signal. We're still above these major support levels right here above the 20-50-day moving average on the Dow Jones Industrial Average. We'll also look at the DIA, similar situation. You can see below average volume on the rally. However, on these two sell-off days, you notice that volume picks up here, so it is something to keep an eye on. But so far, nothing terrible yet. The SPY, you can see volume continues to be below average. As long as we pull back on below average volume, there's a great chance that we could resolve ourselves higher on strong volume. But for now, the S&P 500 and SPY are holding key support levels. The NYSE was the best index on the day, and as you can see, hey, at least it has some accumulation into it, thanks to the bottoming in oil stocks overall, and gold and metal stocks. You can see the metal stocks had a great day today, with XME looking really good. GLD, let's look at GDX. That's better. There you go. Look at GDX. Look at XME. Metals are doing pretty good. Remember, the bulls are still at 32% on AAII. Bears are at 21% with neutral at 46%. So the crowd isn't super bullish here. At the same time, it isn't excessively bearish either. So more backing and filling, I would think, should be expected. Some of the better news is that Goldman Sachs did not really follow through hardcore on its sell-off below the 50-day moving average. The problem is that it didn't retake it either, so we could still easily roll over. Bank of America, similar situation, hasn't broken down yet, but it didn't immediately reverse that breakdown below that key moving average line, and Wells Fargo is already trading below it. So I'll be watching closely, to see how these stocks act here around the 50-day moving average. Getting back to the indexes, Russell 2000 outperformed on the day, up nicely. But looking at the IWM, you can see that there still is no real huge accumulation, and there hasn't been a single above average volume day since that February low. So, very interesting tape we've had here. Never seen quite anything like this, and it probably means that overall, in the greater scheme of things, we're probably more in a range-bound market. Who knows? If the 2015, 2012, lows here could be the range for like the next 20 years. You just never know. And with the lower volume, to think that we should just explode higher here, I think that the healthiest thing would be to continue to back and fill and go sideways, neither breaking down or breaking out, and then eventually trying to move ourselves above the trading range. This would allow the 50 and 200-day moving average to tighten up on these indexes, and that would be very healthy. But volatile tapes make for volatile moves, and Friday was no exception. ANFI, are you kidding me? Wow, this is what happens in these kind of tapes. ANFI broke down below the 200-day moving average on not above average volume, but it broke this main low here. I was not going to even consider holding this stock with a move below 875. As soon as you trade below 875, I'm out. And we don't hold stocks on an end-of-day basis that are below the 200-day moving average, because most of the time they just continue to break down. ANFI in this tape, it said a big FU to me today, or on Friday, so what are you going to do? It's just the way this market works. And then HBP, similar situation. Remember, we went small long position here. We had a small long position back here too, and it ended up failing. I have it nice and big and wide so you guys can see just how crazy this stock is. On a weekly, it's not as crazy though. It's more short term. That's why we didn't lose much when we were wrong. HBP immediately reversed on heavier volume, and then this day made it a full sell and went below 368. It managed to do that on April the 4th, so I was out. On an end-of-day basis, though, it was still a hold. But even if you had your sell stops all the way here at the 361 lows, which would have seemed like it should never break, it did break and went to 356, would have knocked you completely out before HBP does this. So HBP and ANFI are more proof positive evidence of why it's very difficult to load up on anything, hold anything for significant long-term gains. We're just dealing with a very, very volatile market. And now let me go ahead and resize these back to the places that I like them for my own personal amusement or whatever. And so looking at some of the stocks that we had to move on an intraday basis, Kate failed my final sell stop, but on an end-of-day basis, it's still holding up, so it's not a full sell yet. A close below these lows would make it a full sell. me go ahead and expand this a little bit for you guys. I know you guys like to see it better like that. So if it moves below these lows right here, Kate will be a full sell on an end-of-day basis. For me, I've been knocked out. Fran was a full sell signal yesterday. I still had half my shares. Move below 1761 would knock me out. It managed to do that on Friday. The worst one was CVGI, speculative name, not a big deal, but I had my final sell stop at 230. So if it hit 229, I'd be out. Unfortunately, it did trade at 229, so I was out. So I'm out of CVGI. Another up day with that Bob saying Max Green, and I'll put a buy stop for those shares back above 269. Speculative name, so I really don't care, but you know, if it does do that, I want to do it because it's a wholesale auto parts, and auto parts stocks are doing great. And don't forget about WKHS, everyone, the one that I decided to pass on right here. That's a brilliant move because it's now up 108% in a little over a month. Brilliant, just brilliant on my end, whatever. And then Graham also was a 50% sell and moved below this low a day right here, 381, so I was knocked out of half of it. Still held my final sell stops level 366, so unlike CVGI, I still have a small position, but obviously moved below 366 and we'll be out of Graham. But the whole point is that the way that Graham looks and the way that Graham didn't follow through immediately with this setup right here, it just shows me how tricky this stupid tape is overall. And once again, if this tape was super strong, if we were in a really bullish tape, Graham would have followed through immediately with gains. It wouldn't have done that. Same with PZE, which still, by the way, is making a perfect chart. If it continues to even base out more here, that 200-day moving average turns up slightly and it continues to base sideways, it'll present an even better buying opportunity. The fact that we had all these pocket pivot point signals and accumulation days with Max Green Bop right here, this stock should have exploded higher. It would have done it. Every time this stock shows up in before 2008, I'd say it's got an 80% chance of always working. Nowadays, 20% chance, and there you go again. Instead of exploding higher, pulled back 1.2%, and it's gone nowhere. Knocked me out 2/3 of my position. I will put half of that position back on if it moves above 660 intraday, and then on an end-of-day basis, of course, obviously, if it sells Max Green Bop isn't up too much, I'd definitely buy back a lot more. But let's get to the new, first, the rest of the sells. Where are they at? Full DG was the only one that failed on an end-of-day basis. That's high quality, and HH failed on an end-of-day basis, extremely low quality. No big deal. Both are just, cookie cutter sells. Nothing to really, focus on. The new longs, STOR. This is an extremely high quality long position. It has a 99 EPS rating, and I think like a 96 relative strength rating. Is one of the best stocks in the market and one of the hottest groups in the market right now, the REITs. So this breakout has to be taken. Should have bought a ton of it back here when I first started to see it show up, and it had the 99 EPS. Man, whatever, hindsight's 20/20. But STOR is breaking out now. CanSlim quality, 2%. 99 EPS quality, don't forget also. And it was also confirmed in my new 52-week high scans on above average volume. So a total 3% position. RHP is also semi-CanSlim quality because it's CanSlim quality on the earnings and sales side. Relative strength side, it's not yet. But we risk so little before we know we're wrong. It's a higher quality play. It's confirmed in the price volume BOP scan. 3% long position, 2 for CanSlim, 1% for price volume BOP. 48.86 is where our final sell stop will be, and on store it'll be these lows here. What is it? 25.25 right here, the 329 low. But store and RHP, they're both REITs. REITs are hot, so don't ignore that. Also, Coke is another ad signal, another pocket pivot point signal, extremely high quality CanSlim, X perfect speculator quality. First sell stop is below these lows right here. 160.60. Final sell stop is below 158.02. This will be our second ad signal to our original long signal. 1% for CanSlim, 0.5% for being X perfect speculator, and then COHR, another perfect speculator scan, an ad signal. 1% for CanSlim, 1% for perfect speculator. First sell stop obviously is 89.61 or 89.35, excuse me. That'll be the first sell stop. And then the final sell stop will be 87.15 on COHR. We're also passing on LMAT, not touching the 20-day moving average, which means the base isn't long enough. CCF, not touching the 20-day moving average, and it's thin, so it's too speculative. And BVN, base isn't long enough, too far away from the 20-day moving average for passing. But BVN, CCF, and LMAT are the ones that I'm passing on. Also OLED, still have buy stop set on that one.